Introduction. In a world where financial stability is more volatile than ever, two assets have stood out in the race for the title of ultimate safe haven: gold, a time-tested classic, and Bitcoin, the digital newcomer. Today, we'll dive into this battle of financial titans to determine which one is truly the best investment for securing your financial future. But first, let's understand the enduring legacy of gold. Why has it been a bastion of security through the centuries? And what makes gold such a reliable investment today? Then, we'll turn our attention to Bitcoin, the innovation that promised to revolutionize the financial system since its inception in 2009. What does Bitcoin offer that gold cannot? And how is it shaping the future of financial transactions? Join us also for a detailed analysis of the liquidity and acceptance of these assets. Gold is universally revered, but is Bitcoin reaching this same global acceptance? Moreover, we will explore the volatility and risk associated with each. Gold has been a safe haven in turbulent times, but Bitcoin has faced criticism for its drastic price fluctuations. How does this affect the decision of cautious investors? And lastly, don't miss our discussion on the security and storage of both assets. With unique challenges in an increasingly digital world, which of the two offers the best protection against modern dangers? Get ready for a journey through history, technology, and economics as we discover together: gold or Bitcoin, which is the best investment for you? Don't forget to subscribe and turn on notifications so you don't miss any details. Historical context of gold. Gold has been a symbol of wealth and a monetary instrument for thousands of years, marking its presence from ancient civilizations to modern financial systems. The journey of gold begins in ancient times, when it was first discovered shining in river waters, catching the eye of passers-by. Its eternal luster and resistance to corrosion made it ideal for coinage, jewelry, and other valuable objects. The Egyptians, for example, considered gold the flesh of the gods, integrating it into their rituals and funerary treasures, believing it provided immortality. As societies evolved, gold became increasingly central to trade and economy. In ancient Greece and Rome, gold helped finance expansions and conquests. With the fall of the Roman Empire, gold retained its value and continued to be the cornerstone of trade exchanges during the Middle Ages. It was also a time when European mines began to deplete, making gold even more precious. The Renaissance saw the rebirth of arts and sciences, but also of economies based on gold, with modern nation-states beginning to emerge and establish standardized currencies. The discovery of the Americas at the end of the 15th century catalyzed a massive gold rush, with explorers seeking new sources of this precious metal. This quest not only expanded European empires but also inflated their economies with new infusions of gold. During the 18th and 19th centuries, the gold standard was adopted by many countries, establishing gold as the basis of their currencies. This meant that any paper currency issued could be exchanged for gold at a fixed rate, a practice that provided considerable economic stability. However, the gold standard was eventually abandoned in the 20th century when global economic shocks, such as the Great Depression and the World Wars, demanded greater monetary flexibility than the gold standard could provide. Today, gold is still seen as a safe haven, especially in times of economic uncertainty. It continues to be a vital component of international reserves and a favored investment for those seeking to preserve long-term value. The history of gold is undoubtedly a testament to its ability to transcend ages and continue to be an anchor in the tumultuous sea of global finances. The rise of Bitcoin. Bitcoin, created in 2009 by an individual or group of individuals under the pseudonym Satoshi Nakamoto, emerged as a direct response to the 2008 financial crisis, presenting itself as a decentralized alternative to traditional monetary systems. This new digital asset promised to eliminate financial intermediaries, reduce transaction costs, and offer a global payment system independent of central authorities like banks and governments. From its humble beginnings, when the first Bitcoins were mined and the concept of cryptocurrency was little known, Bitcoin began to gain notoriety and value. Initially, it was a technological novelty limited to a small group of cryptography and free software enthusiasts. However, the idea of a currency that offered transaction anonymity and was out of the control of any institution quickly captured the imagination of a broader audience. The first significant Bitcoin transaction, known as Laszlo Hanyek's pizza purchase, where 10,000 Bitcoins were exchanged for 2 pizzas, illustrated its practical potential and marked a seminal moment that helped cement its perceived value. As more people began to mine Bitcoin and conduct transactions, its network grew exponentially. The growth was so impressive that, within a few years, Major companies and retailers began to accept Bitcoin as a form of payment, increasing its legitimacy and value. Bitcoin's meteoric rise has not been without challenges. It has faced significant volatility, which has become a distinctive feature of the cryptocurrency. Its price fluctuations have been driven by various factors, including regulatory changes, hacks on cryptocurrency exchanges, and shifts in public perception about its utility and safety. Despite these uncertainties, Bitcoin has reached peaks of value that have captured the attention of institutional investors and the general public, solidifying its status as a respectable asset class. Moreover, the underlying technology of Bitcoin blockchain has proven to have applications beyond cryptocurrencies. This technology offers a transparent and secure way to record transactions and data, attracting interest from industries ranging from finance to supply chains. Today, Bitcoin is seen both as a speculative investment and a possible future form of money. It continues to challenge established financial norms and sparks a debate about the future of money. Even with all its controversies and challenges, Bitcoin's rise highlights a significant shift in how we conceive and use money in a digital age. Comparison of features. Liquidity and acceptance. Liquidity and acceptance are fundamental characteristics that distinguish gold and Bitcoin, directly influencing their viability and attractiveness as investment assets. Gold, with its millennia-long history, is widely accepted around the world, not just as a form of jewelry or ornamentation, but crucially as a monetary reserve of value. Its liquidity is undeniable. Anywhere in the world, gold can be quickly converted into local currency. This feature comes from centuries of trust and global recognition, establishing gold as a safe haven in times of economic uncertainty and financial instability. On the other hand, Bitcoin, although a much more recent innovation, has made significant strides in terms of acceptance and liquidity. Originally seen as a technological niche with little practical applicability in the real world, Bitcoin quickly gained traction. Today, it is accepted by an increasing variety of merchants, businesses, and even some governments as a form of payment. Bitcoin's acceptance has expanded beyond technological circles to become a viable investment option, especially among the younger generation and technology enthusiasts who value the decentralized and digital nature of the cryptocurrency. In terms of liquidity, Bitcoin presents an interesting dynamic. Although not as liquid as gold due to factors such as price volatility and varying regulations across different countries, its liquidity has improved with the increasing number of exchange platforms and the introduction of Bitcoin ATMs in various parts of the world. These platforms allow for quick conversion of Bitcoin to fiat currencies and vice versa, enhancing its functionality as a means of exchange and reserve of value. Bitcoin's volatility, however, can be a double-edged sword. On one hand, it offers significant short-term gain opportunities that gold rarely can match due to its more consistent stability. On the other hand, this same volatility can deter investors seeking a safe haven during periods of economic uncertainty, an area where gold has a proven track record of reliable performance. Ultimately, while gold continues to be the traditional choice for those seeking a stable and reliable investment, Bitcoin establishes itself as a modern alternative that appeals to those seeking innovation and growth potential in an increasingly digitalized financial world. The choice between these two assets will depend on individual investor preferences, long-term goals, and risk tolerance. Comparison of features. Volatility and risk. When it comes to volatility and risk, gold and Bitcoin exhibit quite distinct profiles that attract different types of investors. Gold is known for its relative stability and has been valued for millennia as a safe haven during periods of economic uncertainty and financial turmoil. Its volatility is generally lower compared to many other assets, making it an attractive option for those looking to preserve capital in the long term. Additionally, consistent demand for gold, both for investment and industrial purposes, helps maintain its value relatively stable, even in times of economic crisis. In contrast, Bitcoin is known for its dramatic price fluctuations. Since its inception, Bitcoin has experienced significant highs and lows in its value, sometimes changing price drastically in a short period. This high volatility is driven by various factors, including market speculation, regulatory changes, and developments in the technological space. For investors willing to accept a higher level of risk in pursuit of potentially higher returns, Bitcoin can offer exciting opportunities. However, this same volatility can be a considerable risk source, making Bitcoin less attractive for those who need stability in their investments. Besides price volatility, the risk associated with each of these assets also differs in nature. Gold, while relatively stable, is still subject to risk factors such as changes in monetary policy, inflation, and shifts in global economic dynamics that can affect its value. On the other hand, Bitcoin faces additional risks related to technology and regulation. As a digital currency, Bitcoin is subject to cybersecurity risks, fraud, and potential adverse regulation that could limit its acceptance or even its existence. Therefore, choosing between investing in gold or Bitcoin involves a careful assessment of a person's investment objectives, risk tolerance, and perspective on future economic and technological conditions. While gold offers a safer, time-tested option, Bitcoin appeals to those looking for dynamic growth and are prepared to face greater uncertainty and risk. Comparison of features. Security and storage. Security and storage are crucial aspects when considering investments in gold and Bitcoin, each presenting unique challenges and solutions. Gold, as a physical asset, requires tangible storage considerations. Gold investors often face the need to physically store their bars, coins, or jewelry securely, typically involving costs with safety vaults or deposits in specialized financial institutions. Besides storage costs, there is also the risk of physical theft, necessitating insurance and robust security measures to protect this valuable asset. On the other hand, Bitcoin, as a digital asset, deals with completely different forms of security and storage. Bitcoin security is ensured by blockchain technology, which is essentially an encrypted and distributed ledger that records all transactions transparently and immutably. This eliminates many risks associated with centralized financial systems, such as banking fraud or institutional failures. However, Bitcoin is not without risks. Cybersecurity becomes a primary concern, with the need to protect private keys that give access to an individual's Bitcoins. Securely storing these private keys is crucial, as any exposure or loss can result in irreversible theft of funds. Various strategies exist for secure Bitcoin storage, including hardware wallets that store private keys offline, providing protection against cyber attacks. Other options include software wallets, which are computer programs or mobile apps that also manage private keys but with different security levels depending on internet connectivity. Additionally, specialized custody services are available for those who prefer not to manage their cryptocurrency security personally, although this reintroduces some systemic risk associated with trusting third parties. Thus, while gold requires physical security and Bitcoin necessitates cybersecurity, both demand careful consideration of how best to protect investments. The choice between the two may depend on personal risk preferences, familiarity with digital technologies, and willingness to take on responsibilities associated with securely storing such distinct assets. Conclusion and closing. While gold has a legacy of reliability and Bitcoin represents the new frontier of financial innovation, the choice between them is not simply a matter of one or the other. Each asset has unique characteristics that can complement a diversified investment strategy. Gold, with its history of thousands of years as a safe reserve of value and its stable performance in times of economic crisis, remains a solid choice for investors seeking protection against market volatility. On the other hand, Bitcoin, while subject to more significant price fluctuations, offers possibilities for exponential gains and represents a bet on the potential of digital and decentralized technologies. The decision to invest in gold or Bitcoin should consider not only the intrinsic qualities of each asset, but also the investor's profile and objectives. For those with a long-term view who can tolerate higher risk, Bitcoin may be an attractive option. However, for those who value stability and have a more conservative outlook, gold may be the preferred choice. Considering the future, it is also important to recognize that the financial world is constantly evolving. Changes in regulations, advancements in technology, and shifts in the global economy can significantly alter how we perceive and use both assets. Therefore, staying informed and adaptable is crucial. I hope this video has provided a clear insight into gold and Bitcoin, helping you make more informed investment choices. If you found value in this analysis, don't forget to like, comment your opinions, and share this video. And if you're not yet subscribed to the channel, consider subscribing for more financial insights like this. Until next time, continue exploring your investment options and making decisions that align with your financial and personal goals.